Market watcher Ross Givens is with me now. Where is this big rally? We had a good rally when we raised interest rates, surprise, surprise, and now we've lost it. What happened?
Well, thanks for having me on, Stuart. I think really the market's just kind of testing it out, right? It always takes some time to digest this news. We shot up after interest rates climbed, which no one was expecting, and now we're kind of retreating and pulling back a bit.
Is it oil, Ross? I mean, we're down 150 points now, and we've got oil. I just saw it go there to about 34.70. Is oil the problem?
I don't think oil's the main problem, but it's definitely a contributing factor. You know, oil is dirt cheap. Everyone is in the oil game right now. We got shale producers. Heck, ISIS is selling oil, right? I mean, everyone is getting into this. So you're right, there is a glut out there, and that is taking its toll on all these energy stocks that have traditionally been some of the safest bets in the market.
All right, I've got a retailer here, and I know you like it, and it's called Wal-Mart. Tell me why you would be buying Wal-Mart, or I should buy Wal-Mart right now. No, tell me. I shop there. I do.
Yeah, no, I mean, look, Walmart's not sexy, right? It's not Amazon. It's not the wave of the future, but it's dirt cheap. I mean, the thing's trading at 12 times earnings. They're doing some things right. Okay, first of all, Walmart's not going to disappear tomorrow. You and I know that. When you need a light bulb at 3 in the morning, there's only one place you can go, right? And they're doing some things, other things right. I mean, they're buying back shares at about 2 to 3% a year. They're paying a 3.25% dividend, which is really strong considering the market.
Wait a second. Walmart pays, if I buy Walmart at 59, I get a 3.5% dividend yield? 3.5%? Really? That's pretty good.
3.25, yeah, that's right, Stuart. So, you know, between the buybacks and the dividend, you're making 5.5%, 6% on the stock.
Not bad.
The valuation comes back to market, and they just don't screw any things up for a year. You know, you can make 10, 15% on a pretty boring stock.
Boring stock? Well, boring, okay. How about Apple? That's boring these days. Didn't used to be. Would you buy it? I think it's at 108 this morning. Would you buy it?
I'd definitely buy Apple. You know what I think is going to happen next year? If we get a Republican in the office, I think someone is going to pass some kind of repatriation law to allow these companies that have cash hoards offshore to bring that money in, maybe at like a one-time 10% tax rate. Apple's sitting on $200 billion offshore that they can't touch. So there's a lot of things they can do with that, and I think they could buy Tesla with it. They could buy a cloud computing company. I mean, in theory, they could buy General Motors, Ford, and Chrysler and own American car production.
They could.
You know, so you're getting a company of that size for 11 or 12 times forward earnings. I mean, it's a bargain.
But that's interesting. You've made Apple an election play in a way. That's interesting. Yeah. Hey, Ross, I'm out of time, but that was good stuff. We appreciate that. Thanks so much indeed.
Hey, absolutely. Thanks, Stuart.
And there's nothing boring about Wal-Mart anytime.